Liebe Zuschauer, herzlich willkommen vom Parkett der New York Stock Exchange. Mein Name ist Manuel Koch und bei mir ist Peter Cardillo of Rockwell Global Capital. Thank you for joining us today.
Nice to be back.
Peter, we see the Dow Jones still high. Europe, Cyprus can't do anything against our stable market.
Yeah, I think the markets are in accordance, like I am, that there will be a solution to the Cyprus crisis. In fact, I think, over the next several hours, we'll probably get some sort of a resolution to this one way or another. I doubt very much it's going to have a negative impact in the sense that I think that they will adhere to the EU's request, and the situation has gotten to the point now that they're going to have to act either way, and I truly believe that no member firms of the Eurozone really wants to depart from the euro, and so I think that they will make sacrifices, concessions, and agree to the EU's proposal. And the biggest thing, of course, is the taxation on deposits, which the EU probably is going to lessen a bit, but still it'll be a tax, and that'll clear the way for the bailout funds.
Even many traders here on the floor expected a pullback for like 1 or 2 weeks already, and we didn't see it, and we just saw a little pullback because of Europe and Cyprus last week. But do you expect that the market still will go up?
I'm not too sure that the pullbacks that we've seen here have anything to do with the situation in Europe. I think it's more from a technical perspective as opposed to a real fear factor. Look, if you look what's been happening in Europe and you look at the European markets, they certainly have not been thrown into a panic mode, and certainly here in the States, that's not the case. Yes, we came off yesterday. You might say the excuse was Cyprus, but I think the real reason for yesterday's decline was the fact that the S&P failed to move into new record territory. And so we had a technical adjustment. Today, the market is rising again. Whether or not we close the week with a small gain or a small loss, I'm not sure. But the fact is that Mr. Bernanke, once again, has established that the drug effect of cheap money is going to be around, and so that's a very, very hard issue to combat. You can't fight the tape. The market wants to go higher, and it probably will until we get real strong economic activity, and then perhaps maybe the Fed's finally beginning to say, okay, it's time to exit the stimulus program, or perhaps we're going to readjust our balance sheet, whatever the case may be. But until that day comes, we will have a pullback. Nothing goes up forever. I expect a pullback. I think we'll get this pullback sometime in the latter part of April, early part of May. But it's not going to be significant, and it's not going to derail this bull market.
Also, Bernanke is always here in the focus, and everyone likes to read between the lines. We see still the cheap money is continuing. They have so much money in the market. Do you think this is a good thing for the economy right now, but in the long term, maybe it's not a good thing?
It will definitely, at one point, it's going to have a negative effect. We could run the risk of inflation. Right now, there's no inflation. And the fact that their balance sheets continues to swell, they're going to have to really toe the line in making sure that when they begin to readjust their balance sheet, that they're not going to create a panic within the markets, especially, obviously, the bond market is what I'm referring to, and that obviously would have a negative effect on equities as well. But I think that they realized those risks, and I think Mr. Bernanke, he himself said, we will take all the precautionary measures when the time comes to unwind the the balance sheet. And so, right now the markets believe that, and I believe that as well. So I just think it's a question of cheap money and looking at some of the fundamentals, which have not really changed. Corporate America continues to produce earnings. They may not expand on unemployment, and that is what's basically keeping the labor market pretty much in check, even though there are signs of it beginning to show some real strength. But nevertheless, we're still far away from that 6.5% target that the Fed once again spoke about earlier in the week. So, I think with corporate earnings still pretty much okay, and PE responding to earnings that are not overvalued and cheap money, it's hard to make a case for this market to really surrender and collapse.
And also an uncertainty could be Washington, D.C. We still have everything going on there. Democrats and Republicans are talking about the fiscal cliff, the budget. Do you expect any solution soon? I mean, the Senate is making some suggestions.
Well, it looks as though they're getting, they're warming up to perhaps finally getting to the objective of making some serious cuts and unwinding some of the automatic cuts that could be a problem. And Mr. Bernanke reminded us of that earlier in the week, that they could weigh on economic activity, and certainly they're going to weigh on unemployment. So I think so. And, I think Mr. Obama just now has to initial the extension of the stopgap bill, which makes us safe at least till September. Could that be renewed again? There's a possibility of that, but I think Congress realizes that we need to really make some serious cut and, of course, cut back on the spending.
But also only to increase taxes is not a solution. You have to cut some spending too, so there has to be a compromise.
Indeed. Increasing taxes will wreck the economy at one point. You're going to bite into consumer spending. You're going to certainly, with corporate taxes being the highest in the global economy here in the States, at one point or another, that's going to affect investments, and that's going to bite into corporate earnings. So, you can't continue to raise taxes. You need to cut spending, and by cutting spending, eventually you can actually lower the tax rates again, and so that would keep the engines of growth continuing, and you have an economy that could continue to navigate without falling into recession.
Peter Cardillo of Rockwell Global Capital. Thank you so much for joining us. Und Ihnen, liebe Zuschauer, auch vielen Dank fürs Zuschauen. Bis zum nächsten Mal hier vom Parkett der New York Stock Exchange.